Got an attitude, what's a bad sense, so I ain't mad at you. And we're taking the chemical damage. It's hard to be around who ain't got no deal with this shit. We're really saying I'm out fucking ammo, man.
Welcome back. It is Friday. It's a nice sunny day and we've finished the week off with, you know how we do, it's finally a short position, but it isn't on the 100k. It's on the 20k because, as I said in the previous video, every single trade we've been taking that has been a short position, we have been losing, and we have not taken a single dub on the 100k account since July. Alright, so that's a serious problem, and I've had to cut it out for a bit. The point of trading on the 20k is to gather data and gather results and have more trust in the model, because currently I don't have trust in the model because we keep losing. I just need to refine the model, just polish it over and back test it a lot. This is a perfect textbook trade.
Let's go, squad, let's get this money, bro. Market recap, welcome back, boys, to another one. Alright, I'm gonna stop ear raping the mic. Happened this week, we've had a lot of ups and downs, but more ups than the downs, which is always a good thing. I keep it 100% transparent with you lot, so I'm going to show you how this month has gone so far. So in the first week we were up like $300, but then we took another L because we took another trade because we were greedy, and then we took a 1.1k loss the next day, which hit hard. It hit harder than we should not have been risking that, and that was one of the worst trades I ever took. The second week we were down like minus 1.3%, which is also not good. And the third week, which was the week that we've just had, and now we're doing a market recap on, we took a 750 loss, then a 750 dub to make up for that dub, and then we took a 1k dub. So that was then made up another 1%. So this so far this week, let's just call it 1%. So 2.3% down on the account. We are now 1.3% down on the account, which is good. At a point we were down like 3k because obviously we took that loss for the first time. The reason why that loss was so big was because we used full size on that trade when I shouldn't have, because as you guys can see we were in a losing streak, and then I sized down, I used half size for this trade. So this trade would have been like a 2k trade or like a 3k trade, but obviously it then matched this one because it's half size. And then we used this trade, which was only like a third bigger. My maths is so bad, but it still wasn't full size. It was like 3/4 of the way. So this would have then been like a, I don't know, like 2.5k trade. But that's not the point. What it is, it was what it is, and this is what we should have been doing from the start. But it's still good because we've had now 2 green days, and we're now coming back into drawdown. And you know what's crazy? All of these have been shorts. These have been shorts. Last month was all shorts that we took L's. The previous month of July, we blew the account because we were losing shorts. You know what I'm saying? It's not good. Into Monday, we were feeling optimistic. We had another short position coming up. Now, whenever I see a short position during this time, I was like, okay, short coming up. I'm not too good at shorts. This is probably not going to end well, which it doesn't every single time. But this was a good model in my opinion. So I haven't got all the levels marked out because I always remove it before when I go into the next trading day. A minor buy-side liquidity level, which was then taken out, and then market just kept pushing, and this would have been our major buy-side liquidity level. But because we've taken out all this buy-side liquidity, I was thinking, right, okay, we've formed a bearish uni, we've come down, we've got this 1 minute fair value gap, which overlays with our 0.87 Fibonacci retracement, which was the wrong mistake to do. I thought, no, actually it's not. I thought when we got in on this entry, it was really good. We tapped in, we were in profit for a lot of it. I thought it was going to cruise down, but then we came down here, we formed equal lows, and it failed to displace lower through this 5 minute fair value gap, which overlaid with our 0.62 retracement, and went up and stopped us out, and we were just being edged by Euro USD for most of this. What we should have done, like we always do, is wait for price to calm down, trade through this 5 minute fair value gap, retrace back into 0.62, and then have our sell off, which we didn't do. And I wanted to get in on the move earlier, which is the mistake, and I've learned from it now, because mate, it's better to just be later and have more confirmation than trying to, you know, get in early on the move, which may not even be there. That was basically the first loss. There's not much to it. It's just, you know, we look at this and we just learn. It's like from the first L we took of the month with the 1.1k trade, I saw on the 5 minute on the 1 minute it shifted structure, but on the 5 minute it did not. We need that 5 minute structure shift, otherwise it's literally just a liquidity sweep. On the 1 minute it may shift structure, but if you look on the 5 minute, it completely wicked out that level, and it was just a liquidity sweep, and we got completely ran through. But whenever I get on at like 7 o'clock, I always have such a clearer mind about what the market's doing, because I've been looking at it for so long and I have way more time to look at what I'm actually doing. I start logically thinking, and by the time it gets to 8 o'clock London open, then I really have a strong narrative and I have a good idea of what's going to happen. This is just before the Asia Open. Our major buy side would have been here, and right there we had our equal highs. We come through and we sold all the way off. So originally I was thinking sells, and you see we've got the model here. It's not even during London. It completely sold off during pre-market. Just at the start of London, it swept major sell-side liquidity for Asia. So our major sell-side liquidity would have been like here, and we swept it. So we came back up, traded into this 1 minute inverse fair value gap, which is our 0.5% on our Fibonacci. And there you go, we had our rejection, and that is where we entered from, targeting the equal highs again, which was likely going to trade further up and take out further New York highs. We would just let the rest of the trade run. That was literally like 3 minutes we hit TP. 1, 2, 3. Like you'll be able to see from the video or from my Instagram, it was 3 minutes we smashed TP. Like, what other job pays 1k in 3 minutes? You fucking tell me. I don't know. Unless it's Jeff Bezos, but mate, look, I'm not Jeff Bezos. I'm a 17-year-old student, right? But I'm also a big boss, right? So we had the equal highs, we had our major buy side liquidity level, then we had our major sell side. Price sold off, which would have been the move I wanted, but because it's done it so quickly, I was like, right, there's a lot of volume coming down, we've manipulated lower. So that would have been, I guess you could say, like, it's like the AMD. This would have been our accumulation, this would have been our manipulation, and then this move to the upside would have been our distribution. So we came down, swept major sell side liquidity level. If you look on the 5 minute, whenever you have a 5 minute rejection off your zone, off your 1 minute inverse fair value gap or your retracement level on your Fibonacci, then it should be a good trade. You know, like, look at that, mate. If you're trading on the 15 minute, that would have been absolutely blessed up for you, mate. 1 candle, and on the 5 minute it was just like 2 candles. It closed past TP. That was our 750 trade, which made back his loss, which was good, but not exactly good enough, because we should not have been using full size when we started the week, and if we had been using half size, then we would have been further in profit, but we weren't, and it is what it is, so you just got to deal with it. Which just shows, boys, hindsight is a motherfucker, but just stick to the plan, stick to your risk management, just size down when you need to if you're in a losing streak, because in the future it's going to help. Because if you take a L with full size, it's not good, because your confidence is already damaged enough. So this is a setup I've been really working on over the last few weeks. I've got so many screenshots in my camera roll, you wouldn't even believe it, of this setup. Price started from the low, which formed our major sell side liquidity level. We bought all the way up, which then formed our major buy side liquidity level. We've come back in and we've come down, and now what you can see is that when we come into pre-market, you then mark out your minor sell side liquidity and minor buy side liquidity. So you're just marking out the highs and the lows. That's all it literally is. And what you can see here is that we have a lot of consolidation right now. So price came down, it swept our minor sell side liquidity. I thought it was going to come lower, come all the way down and sweep major sell side and come back up, but we've been consolidating all this way, and usually when it's consolidating this much and it forms all these equal lows and this really nice sweep, this is a nice sharp sweep of liquidity, is a very, very high chance that it's just coming down, it's sweeping liquidity, and then it's just going to come back up, and you know, like, it's gonna do this. Yeah, say this is buy side liquidity, it's come down, consolidating, back up again. It's like a V. It forms like a fucking V. You see that? That's the down. This is going to be the up, and that's the V. And then you can see we have this 1 minute bearish fair value gap, which also had a nice market gap in as well, which was like, okay, that is like the most inefficiency. Like, it needs its inefficiency filled, and I'm gonna fill it. All right, I'm gonna fill its inefficiency. We sweep liquidity. It's come back up. We had our structure shifts. Came back in, tapped into this, but I was waiting for it to fill the gap, because that is a very obvious gap that needed filling. Whoever says like this shit does not work, it just clearly does though, doesn't it? It just does work, because look how it comes down, taps into the gap, Look at that rejection. That is the most beautiful rejection I've ever seen. And that's how you show where we're coming into the winter months, because the winter months are so much cleaner. Now we just see the rest of the trade. It never beat down past that wick, and we were just cruising. I was thinking about taking partials, but then I was like, you know what? I'm not exactly in full size here, and it would be a waste if I just took off partials, because I'm very confident that this is going to be going all the way. So then we keep cruising. We hit that minor buy side liquidity level. Price keeps pushing. It's a lot of patience required in this, boys. And then there you go, that was TP smashed. There's our major buy side liquidity. That's the V I'm talking about, guys. See that? It's not exactly a straight view, it's like an acute angle. God, I'm getting maths PTSD. But you see what I mean? You'll just see everything play into the analysis. I'm not even going to remove it. Just watch it play into the analysis. So we started off from the low, so major sell side liquidity. We were coming up. We then formed another sell side liquidity, minus sell side liquidity level. Price came up even further into pre-market. As we're coming into pre-market, forms a 15-minute fair value gap. You can see right there. Actually, it'll be on the next candle, I think. There you go. So you can see right there, 15-minute fair value gap. I'm seeing that price going higher and higher. So I'm definitely getting prepared for shorts here, because I recognize the model. Once you trade these charts enough, you recognize the models and you form a bias very quickly. That's the whole point of pre-market. And price pushed up higher, so I was like, okay, let's wait for this. We have our unicorn setup that was formed. I wanted the price to come down, which it then did, and formed a 1-minute fair value gap. And now a lot of traders I would know would enter on this 1-minute fair value gap when it gets tapped in. So right there, it would have filled you in just outside, but I would say that's a valid fill. I want to wait. As I said, from Monday, we learned our lesson, and we are waiting for further confirmation and entering on our 0.62 fib instead of 0.87, because it's just better confirmation. Lower down, more confirmation, higher probabilities. Right? Displaced lower, taken out this minus sell side liquidity, and reacted off this 15-minute fair value gap, and retraced back into the 0.62 fib, and the rest was history. There you go. So we took profits at this minus sell side liquidity level, because that was plenty, but it did go all the way to major sell side, and it should have gone back up again. So there you go, boys. If you guys think liquidity is not a real thing, which you should, if you haven't got the brain power of like a 2-year-old, then look, mate, this is just, that is the most ICT A+ setup I've ever fucking seen. And if we can get those throughout winter, then we will be in a very good place. I hope you guys have enjoyed this video. I'll see you in the next one.